Relocation buyers are moving greater distances, cash buyers are tough competitors, and the relief in home prices is likely over. So if you're one of the 25% of the population who believes that prices are going to go down over the next 12 months, stay with me for some facts from some well-known experts who claim that the real estate market is poised for better days ahead as the short-lived housing recession comes to an end. Lawrence Yun, Chief Economist for the National Association of Realtors, and Jessica Louds, NAR's Deputy Chief Economist and Vice President of Research, provide a breakdown of the top 8 trends that they're seeing in the housing market. So the first one is the doom and gloom headlines are overblown. So while the housing market is correcting after pandemic-fueled highs, with existing home sales plunging 19% year over year, that doesn't mean that a long-term rut is forming. So due to all the fear-based headlines, according to Fannie Mae, 1 in 4 people still believe home prices will depreciate. So according to Louds, I keep hearing people saying that they're waiting for prices to drop, she said. But if you look at the data, that's just not happening right now. You could see some home price differences in just one state and then see some big headlines, but the skies are not falling. Many of the fearmongers are repositioning their housing market forecasts. Bill McBride, who claimed there would be an inventory surge drawing us into a depreciation state, wrote in October 2022, house prices 7 years in purgatory with a 10% decline in nominal prices. Many doomsayers were also banking on the huge surge of inventory to depress the market, as shown in this chart from Realtor.com, with the red line showing us those predictions. It's straight up. But he recently changed his tune to state that the inventory surge in 2022 was somewhat of a head fake. Some potential sellers quickly listed their home, but that surge ended pretty quickly. So when you look at what actually happened, new listings dramatically dropped instead, putting a swift end to the assumption that home prices would dramatically depreciate. And unlike the crisis in 2006 and beyond, homeowners have equity. So even if they do face a life event, they will likely still have enough equity to cover their mortgage. So number 2, Americans are moving longer distances. So from 1981 to 2021, the average home buyer moved just 10 to 15 miles away from their previous residence. But over the last year, the average buyer moved a median of 50 miles, and a quarter moved more than 470 miles. NAR's data was showing that. But buyers are moving for a variety of reasons. They're including proximity to family, housing affordability, and with over 440,000 people migrating to Florida annually, we are well aware of the 3 reasons that have impacted South Florida the most: retirement, lifestyle, or the ability to work remotely. The third trend is that cash buyers remain a formidable competitor. 26% of the national marketplace consists of cash buyers, which is substantially higher than before the pandemic, according to Louds. Which, while many of America grapples with high interest rates stalemating the resale home market, Naples home sales activity has remained steady for the past year, even as cash sales for homes in Naples decreased from 66.7% in January to 53.5% in July. So cash buyers nationally and locally are proving to be steep competition for first-time home buyers who tend to have smaller down payments. This folds us into our next trend. Number 4, generational dynamics are at play. So the median age of a first-time home buyer is 36. That's reflecting a cultural shift towards entering homeownership at much later in life than past generations. A lack of affordable inventory is really pressing on young adults' ability to buy, according to NAR. FHA and VA loans, which help many underserved buyers, have lower down payment options, and they may be key to bringing more young adults into homeownership. Baby boomers have usurped millennials as the strongest home buying force in America, with the elder group comprising 39% of the market compared to 28% of young adults. And that's according to NAR data as well. The millennials have been priced out and are often losing out to cash buyers, according to Louds. She said baby boomers, many of whom have accumulated housing wealth over decades, appear motivated to move, living closer to families, buying their forever homes, having a smart home, or living the lifestyle that they've been working so hard for. Naples and Southwest Florida have a bird's eye view of the migration of new boomer residents moving to the area full-time or purchasing vacation or investment property down here. So our 5th trend is that new construction is actually a bright spot in the market. So while existing inventory is at historical lows, the new home market is offering more options to buyers, according to Lawrence Yun. New home sales typically make up about 10% of the market, but they're actually currently running at 20%, according to NAR. And NAR also predicts that new home sales are going to rise 12.3% in 2023 and 13.9% in 2024. Our sixth trend is that home prices likely won't fall any further. Home prices are down about 1% compared to a year ago, according to Yoon. And there are geographical variations. Austin, Texas, San Diego, Boise have some suffering. San Francisco, for example, has seen home prices drop 15% year over year. Now, the appreciation, as you can see in this chart of top cities, was crazy over the last 3 years. And did some of these cities have to go back and give back some of their wealth and have a correction? Apparently so. However, the only one not showing month-over-month appreciation right now is Phoenix, and they're really only down 0.1%. A quote from Lawrence Yoon, "Overall, I think the price decline is over." Other price measurements, like the FHFA's house price index, are beginning to show acceleration from month-to-month home prices. Also, the median sales price for an existing home in June surged to $410,200 nationally. That's the second highest level in more than 2 decades, according to NAR. So while there may be little changes to prices from one quarter to the next, the long-term perspective is that housing has brought great wealth accumulation for homeowners, even those who have purchased in the last 2 years. So to take that a step further, home prices remained higher compared to a year ago in practically every US market. And if we look at the original home price forecast from December 2022 versus the current year-end home price forecast, they've all changed their tune dramatically. This chart shows how much confusion there was in the market at the end of last year. Fannie Mae adjusted from negative to 3.9% up. AEI is the most dramatic change from negative 20%, which is crazy, to 6% appreciation. Zillow and CoreLogic also made large adjustments to their 2023 forecast, and NAR has forecasted home prices to rise by 2.6% in 2024. So specifically in Naples, Southwest Florida, the overall median prices of homes in the first 7 months of 2023 had continued to increase when compared to the first 7 months of 2022. And even though there were less homes sold in July 2023 compared to a year ago, the number of pending listings actually increased 6.3%, which really just kind of illustrates our market's steadiness. Now, our seventh trend is that mortgage rates are likely to decline somewhat. According to Yoon, he's hopeful that mortgage rates will soon cool from their near 7% averages, which is increasingly pressed on home buyers' budgets. However, Fitch Ratings, with the downgrade of the U.S. debt rating, that could bump up borrowing costs. According to Yoon, Federal Reserve's next decision on short-term interest rates, its meeting in late May, is obviously going to have some influence on the direction of long-term borrowing costs. If the Fed stops raising those short-term rates and inflation continues to edge down, the 30-year fixed mortgage rate could fall near 6% by the end of the year, according to Lawrence Yoon. Now, when you review mortgage rate projections of Fannie Mae, Mortgage Bankers Association, National Associations of Realtors, the average of all three, you can see that they all believe they'll be somewhere close to 6 at the end of this year. And as we move into 2024, we may break into the 5s. Chairman Powell continues to work on driving inflation down to 2%. If he achieves that, the experts say that mortgage rates will follow suit and drop. So our eighth trend in the real estate market now is inventory. It's housing's most pressing problem. So home buying demand is still high, while housing inventory is at historical lows. So 76% of homes sold nationally in June were on the market for less than a month, according to the NAR data. The association has been calling on lawmakers to do more to help supply meet demand. And NAR supports tax incentive proposals for those who sell a residential property being used as a rental to an owner-occupied buyer. The national homeownership rate may have peaked already, considering the barriers keeping first-time home buyers from entering the market, according to Yoon. And as he says, if we continue to restrict supply, prices will skyrocket and homeownership will slow. So specifically in Naples, Southwest Florida, new listings are increasing, but we still have half of that inventory that we had in the last normal market, which was 2019. And while new listings and closed sales and pending sales activity have almost returned back to those 2019 levels, overall inventory has not. The desire to live in our beautiful coastal community and our lack of housing inventory have caused prices to rise by over 50% during the pandemic. In July 2019, the median price was $325,000. In July 2019, the median price was $325,000. In July 2023, our median closed price increased 9.2% to $595,000 from July 2022. So what does all this mean for home buyers? Some discouraged buyers should stop looking for their forever home and start looking for their get my foot in the door to start building equity home. According to financial advisor Brian Say, he offered some good advice. So he said, your house does not have to be your forever home. Buyers can settle for their best option now and plan to trade up later. Financial advisors also say that home buyers shouldn't bet on future rates and try to time the market, because no source can accurately predict what's going to happen. But instead of trying to bet on the direction of rates, potential home buyers should focus on what they can control, such as their budgets and choice of property. As rates rise, potential buyers may need to adjust their price range downward if they've not done so already. And it also helps to be flexible and willing to make some compromises, such as maybe foregoing the third bathroom or buying outside of a preferred set location. And with long-term appreciation and the wealth that real estate provides, it's almost always a good time to buy if you plan to live in the home for several years, and particularly if you use it as an investment property as well. So thanks for joining me today. I hope this helps clear up some of those crazy real estate hype things that you keep hearing. But for more info on the market and tips for living your best life here in Naples, Southwest Florida, click subscribe, and I hope to help you love the way you live, Naples.